If your P&L feels random, it's not because you haven't learned enough trading strategies. It's because you haven't implemented a trading system. In the next few minutes, I'm going to explain to you the difference between a strategy and a system, why confusing the two keeps most traders stuck, and I'm going to provide you with the simple exercise so you could start building your system today. Stick with me because I'm going to share the exact approach that allowed Ed to grow his win rate from 40% to 80% within 4 months. It was not by adding new strategies, but it was by implementing a repeatable and consistent trading system. First, I'm going to define what it means to be consistently profitable so you don't chase the wrong goal. Consistently profitable doesn't mean just day-to-day profits because wins are randomly distributed. You'll have green weeks, slow weeks, and even a red month, but that doesn't disqualify you. What really matters is these two things to determine if you're consistently profitable. First, being net positive over time, and second, consistently using the same process. So as long as you have a decent win rate above 40%, you will be net positive over a month or quarter, as long as your winners are bigger than your losses on average. That's managing your risk. You should repeat the same approach every single trading session. When it comes to selecting your stocks, how you draw your zones, what makes you confirm your entries, what you do when you manage your trade, and where you decide to take your exits based on market structure. Each step of your trading process should be defined so that your results are repeatable. What I always tell my students is simple. How can you expect to be consistently profitable if you're not even consistent in your approach towards trading? Once you repeat the same system for stock selection, zone identification, entry and exit criteria and rules, that's when you give yourself a real chance to see consistent results because your approach towards the market each session is consistent. Think of your trading system as your daily routine on how you approach the market. What are the steps that you take when you open up your brokerage account? You need to define every single one of those steps. And if it is outside of the strategy, it is part of your system. Your strategy is what makes up the components of your system. So for example, my strategy is supply and demand. I mark up my levels of interest as supply and demand zones, whereas your strategy might be support and resistance, and you're going to mark up your levels of interest as support and resistance levels. However, our trading process and our trading system can still be very similar even if we have a different strategy. So think about what are the steps that you're taking before you're marking up your levels of interest and after you're marking up your levels of interest. How did you select the stock that you chose? Is there a process to that? What about the process that you use to mark up your level of interest? Are there rules to it? Do you know exactly what structure you're looking for and what invalidates your levels? What do you do after you mark your levels of interest? Do you have rules for your strike price selection? Do you have rules for your expiration date selection? How far away will your target be? How far away will your stop loss be? What's going to be the risk-reward ratio of that? How are you going to manage your trade in the middle? Each of these questions are process-oriented, not strategy-oriented. So when you're developing your trading system today, think about each step in your process that your strategy does not define. You want your trading system and process to be so defined that it could become your daily trading routine. Your job as a trader isn't to win every day. It's to make sure your wins are greater than your losses and that your net is positive. So if you're confused about the difference between a trading strategy and having a trading system, I'm going to define that for you right now. Your trading system is your fixed process. It's the recipe of your trading routine. These steps never change. The process goes as follows. First, you check your watch list and you scan for your stocks. You select the stock that you're going to trade. You perform high time frame analysis and you assess the high time frame context. Then you mark your levels of interest. I mark supply and demand zones from my technical analysis. The next step is creating a plan based on scenarios, not predictions. I do this analysis when the markets close so I could prepare for when the trading session does open. So I need to be prepared either direction that the market decides to move. Remember, the market can move up, it can move down, and it can also move sideways. I'm prepared for all three of those scenarios. So after I identify my levels of interest, I create my trading plan based off of three scenarios that could happen in the day. Since there's multiple scenarios that could happen, you need to be able to differentiate from them. And you need to know exactly what confirmations you're looking for. So the next step is your confirmation checklist. And this is what tells you to time your entry after your levels tested. After you identify your entry using your confirmations and you're in your trade, the next step is defining your risk and where you're going to put your stop loss and where you're going to put your target. I always target a supply zone or a demand zone. That's part of my strategy. And I always put my stop loss based on market structure, based on the chart. The systematic part of this process is that even though I use market structure to place my stop loss and my target, I always ensure that the difference between my stop loss and my target is a 1-to-3 risk reward ratio. So if I risk $1,000 in a position, I'm aiming for at least $3,000 in profit. Whenever I create my trading plan and I set up my scenarios, that's when I ensure that the setup allows for a 1-to-3 risk reward ratio. After you execute, the next step is trade management. What will you do when you're in the trade and it's in the middle of your stop loss and your target? Is there any extra strategy or rules that you need to add to your system and define? From trade management, you'll exit the trade following your exit rules. So typically, you'll exit just at your stop loss or your target. And once you complete a trade, you should journal every single one of your trades. So that's my systematic daily routine for trading. Selecting my stocks, analyzing high time frame context, marking my zones, creating scenario-based plans, having my entry confirmation checklist, ensuring risk management, managing my trades, exiting a trade, and journaling every single one of those trades. That's my system. That's my fixed process that I follow every single day in trading. Your strategy are the flexible methods of analysis that are inside each step of the systematic process. Strategies adapt to context, but the steps themselves stay the same every single day. Your system says, step 1, pick a stock. Your strategy says how you pick it. Your strategy for selecting stocks could be based on different things. It could be based on institutional flow, supply and demand zones, indicators, trend, context, liquidity, or catalysts. You change your strategy as the market shifts, but you never change that step of the process. That's why I say when you have a systematic approach towards trading, you'll be able to repeat the same process consistently each day. And this is what allows you to follow your strategy, even if you need to adapt based on changing market conditions. This is where most traders get stuck because they think their strategy is a system, but they forget to connect the two. And when market conditions change, most traders panic because their strategies stop performing as effectively. They panic and then they rebuild everything starting from scratch. But that's the wrong approach. When you're able to separate the effectiveness of your strategy versus your system, then you'll see more clearly in which area you need to make adjustments. Say it with me. Consistency in your approach towards trading is what's required to become consistent in your trading results. Here's the exact framework and skeleton you could use to frame your trading days. Step 1, identify your key areas of interest. This means looking for high time frame market structure, supply and demand zones, support or resistance, and trend lines. Step 2, create hypothetical scenarios. Since you can't predict what will happen when the market opens, prepare for both scenarios. Will price reverse from your level of interest, or will price break out? And what confirmations do you want to see that will validate your entry for that setup? Step 3, define your risk-reward ratio before you enter the trade. I teach a 1 to 3 risk-reward ratio minimum. If it's not there, then skip the setup. Step 4, wait for confirmation and execute. Avoid emotional entries. So have a very specific plan so that you could follow it to the T. Now I'm going to share with you a practical action plan that you could take so you could build your own systematic approach towards trading. First, open a Google document and write out every single step you take from idea to exit. Be specific. For every single step you take in your trading routine, ask yourself, what am I doing and why am I doing it? If any step you take is random or based on gut feelings, that is not part of your system. And that is where we can install rules so you don't make any actions that aren't aligned with your system and your strategy. So for the 4 steps of your system, this is what you'll do. When you identify your key levels, identify them on high time frames, like the 1-day chart, 4-hour chart, and 1-hour chart. And when you create your scenarios, be specific. You want to create your scenarios in an if-then framework. So if price tests my supply zone, I want to see exactly what, then I'll enter a put. So for example, for me, if price tests my supply zone, my entry criteria checklist is 3 points. 1 could be price action patterns. The second could be volume price analysis, and the third could be an indicator. I'll define exactly what I want to see in the scenario that price reverses from my level. And I'll also define another scenario where price breaks out of my level, and I'll be prepared for both opportunities. Your entry criteria checklist might be slightly different based on different setups within your strategy, which you also need to define. What's going to be the difference on you entering in a reversal versus you entering on a breakout? Define it for yourself. With risk management, I only take trades that allow me the opportunity to see at least a 1 to 3 risk-reward ratio. From there, since you already have your plan written down, you're prepared for both scenarios, your entry criteria checklist should be so specific and defined that there's no room for emotions or hesitations once you see those criteria. Enter on your confirmations, manage your trade according to what was pre-planned, and don't improvise in the middle of the trade. If you find yourself improvising in the middle of the trade or in the middle of the day, that's how you know you're not following a system or a strategy. If you consistently make mistakes that is not following your system or your strategy, you want to create a tangible trading rule that if you follow that rule, it will help you to not make that mistake again. We could also talk a little bit about trade management and exit plans. You always want to use a hard stop loss when you're options trading, especially if you're day trading. I put my hard stop loss at the point of invalidation of my trade. And in my pre-market plan, I defined if there's levels of interest where I'd be interested in taking partial profits or trimming. You do not make that decision when you're in the middle of the trade. You predefine that level. I also trail my stop loss using market structure. This is part of my strategy and it's defined within my plan as well. I typically will only exit at my stop loss, which is my area of invalidation, or at my target, which is based on my high time frame levels analysis. What I do in the middle of the trade is called trade management. I personally do use trailing stop losses, and I trail my stop losses based on market structure. After I exit my trades, I immediately journal those trades so I could analyze them in the future. Once you have a trading system in place, the final piece is patience. You have to wait for price to reach your level of interest and align with your entry confirmations, and then execute. Make sure you're never over leveraging and you have strong position sizing and risk management rules as well. That's how you build discipline. If you need a more simplified starter template, use this. First, pick 2 to 3 large cap, highly liquid tickers to trade. The most popular ones is SPY and QQQ. If you want to find other stocks to trade options on, I recommend to trade the top weighted equities of the S&P 500, such as Apple, Amazon, Nvidia, Netflix, Microsoft, and Meta, and Tesla. The second step is mark your levels of interest on the high time frame, above 1 hour, before the market opens. And then when the market does open, I drop down to the 5-minute time frame so I could time my entry. Step 3 is create a Google document where you will write out your plans each day with your scenario A and your scenario B. 4, you want to require at least 2 confirmations minimum. I personally use 3. I identify these confirmations on the low time frame. I use the 5-minute chart for my entry confirmations. 5, only take the setup if you get at least a 1 to 3 risk-reward ratio. 6, manage your trade using market structure and predefine any trimming points. 7, journal every single trade. When you install a system, trading becomes way more simple. You gain clarity, confidence, consistency, and most importantly, control. If you're a beginner and you want a full step-by-step guide on how to start trading, I created a 30-minute long lesson that breaks down exactly how to start out from scratch. I'll link that right here so you could watch that next. Peace.